VA loans. Eligibility. You must have satisfactory credit, sufficient income, and a valid certificate of eligibility, COE, to be eligible for a VA guaranteed home loan. The home must be for your own personal occupancy. The eligibility requirements to obtain a COE are listed below for service members and veterans, spouses, and other eligible beneficiaries. VA home loans can be used to buy a home, a condominium unit in a VA-approved project, build a home, simultaneously purchase and improve a home by installing energy-related features or making energy-efficient improvements, buy a manufactured home and/or lot, to refinance an existing VA-guaranteed or direct loan for the purpose of a lower interest rate, to refinance an existing mortgage loan or other indebtedness secured by a lien of record on a residence owned and occupied by the veteran as a home. Spouses. The spouse of a veteran can also apply for home loan eligibility under one of the following conditions: unremarried spouses of a veteran who died while in service or from a service-connected disability, or spouse of a service member missing in action or a prisoner of war. Surviving spouse who remarries on or after attaining age 57 and on or after December 16, 2003. Note: a surviving spouse who remarried before December 16, 2003 and on or after attaining age 57 must have applied no later than December 15, 2004 to establish home loan eligibility. VA must deny applications from surviving spouses who remarried before December 6, 2003 that are received after December 15, 2004. Surviving spouses of certain totally disabled veterans whose disability may not have been the cause of death. Other eligible beneficiaries. You may also apply for eligibility if you fall into one of the following categories: certain U.S. citizens who served in the armed forces of a government allied with the United States in World War II, individuals with service as members in certain organizations, such as public health service officers, cadets at the United States Military, Air Force, or Coast Guard Academy, midshipmen at the United States Naval Academy, officers of National Oceanic and Atmospheric Administration, merchant seamen with World War II service, and others. Restoration of entitlement. Veterans can have previously used entitlement restored to purchase another home with the VA loan if the property purchased with the prior VA loan has been sold and the loan paid in full, or a qualified veteran transferee, buyer, agrees to assume the VA loan and substitute his or her entitlement for the same amount of entitlement originally used by the veteran seller. The entitlement may also be restored one time only if the veteran has repaid the prior VA loan in full, but has not disposed of the property purchased with the prior VA loan. Remaining entitlement and restoration of entitlement can be requested through the VA Eligibility Center. Eligibility requirements for VA home loans. Find a real estate professional to work with. Perhaps a friend has someone to recommend, or you could look under real estate in your Yellow Pages or on the web. Find a lender. Locate a lending institution that participates in the VA program. You may want to get pre-qualified at this point. That is, find out how big a loan you can afford. Lenders set their own interest rates, discount points, and closing points, so you may want to shop around. Get a certificate of eligibility. The certificate of eligibility, COE, verifies to the lender that you meet the eligibility requirements for a VA loan. Learn more about the evidence you submit and how to apply for a COE on our eligibility page. Find a home and sign a purchase agreement. Work with a real estate professional and negotiate a purchase agreement. Make sure the purchase and sales agreement contains a VA option clause. Here's a sample of a VA option clause. It is expressly agreed that, notwithstanding any other provisions of this contract, the purchaser shall not incur any penalty by forfeiture of earnest money or otherwise be obligated to complete the purchase of the property described herein, if the contract purchase price or cost exceeds the reasonable value of the property established by the Department of Veterans Affairs. The purchaser shall, however, have the privilege and option of proceeding with the consummation of this contract without regard to the amount of the reasonable value established by the Department of Veteran Affairs. You may also want the purchase agreement to allow you to escape from the contract without penalty if you can't get a VA loan. Apply for your VA loan. Work with your lender to complete a loan application and gather the needed documents, such as pay stubs and bank statements. Loan processing. The lender orders a VA appraisal and begins to process all the credit and income information. Note, VA's appraisal is not a home inspection or a guarantee of value. It's just an estimate of the market value on the date of the inspection. Although the appraiser does look for obvious needed repairs, VA doesn't guarantee the condition of the house. The appraiser, who is licensed, is not a VA employee. The lender can't request a specific appraiser. Assignments are made on a rotating basis. The lending institution reviews the appraisal and all the documentation of credit, income, and assets. The lender then decides whether the loan should be granted. Closing. The lender chooses a title company, an attorney, or one of their own representatives to conduct the closing. This person will coordinate the date and time and the property is transferred. If you have any questions during the process that the lender can't answer to your satisfaction, please contact the VA at your regional loan center by calling 1-877-827-3702 with hours of operations from 8 a.m. to 6 p.m. Eastern Standard Time. VA funding fee. Generally, all veterans using the VA Home Loan Guarantee benefit must pay a funding fee. This reduces the loan's cost to taxpayers, considering that a VA loan requires no down payment and has no monthly mortgage insurance. The funding fee is a percentage of the loan amount, which varies based on the type of loan and your military category. If you're a first-time or subsequent loan user, and whether you make a down payment, you have the option to finance the VA funding fee or pay it in cash. But the funding fee must be paid at closing time. You do not have to pay the fee if you are a veteran receiving VA compensation for a service-connected disability, or veteran who would be entitled to receive compensation for a service-connected disability if you did not receive retirement or active duty pay, or surviving spouse of a veteran who died in service or from a service-connected disability. The funding fee for second-time users who do not make a down payment is slightly higher. Also, National Guard and Reserve veterans pay a slightly higher funding fee percentage. To determine your exact percentage, please review the latest funding fee chart. Other loan costs. Be aware that the lender charges interest, in addition to closing fees and charges. Here are some general rules. The lender, not VA, sets the interest rate, discount points, and closing costs. These rates may vary from lender to lender. Closing costs, such as the VA appraisal, credit report, state and local taxes, and recording fees, may be paid by the purchaser, the seller, or shared. The seller can pay for some of the closing costs. Under our rules, a seller's concessions can't exceed 4% of the loan, but only some types of costs fall under this 4% rule. Examples are payment of prepaid closing costs, VA funding fees, payoff of credit balances or judgments for the veteran, and funds for temporary buy-downs. Payment of discount points is not subject to the 4% limit. You are not allowed to pay for the termite report unless the loan is a refinance. That fee is usually paid by the seller. No commissions, brokerage fees, or buyer-broker fees may be charged to the veteran buyer. Adding the VA funding fee and other loan costs to your loan may result in a situation in which you owe more than the fair market value of the house and will reduce the benefit of refinancing, since your payment will not be lowered as much as it could be. Also, you could have difficulty selling the house for enough to pay off your loan balance. Remaining entitlement. Veterans who had a VA loan before may still have remaining entitlement to use for another VA loan. Most lenders require that a combination of the guarantee entitlement and any cash down payment must equal at least 25% of the reasonable value of sales price of the property, whichever's less. Thus, for example, $23,500 remaining entitlement would probably meet a lender's minimum guarantee requirement for a no down payment loan to buy a property valued at and selling for $94,000. You could also combine a down payment with the remaining entitlement for a larger loan amount.